Hello, investors, and welcome to the channel. Today I'm going to talk about Redwire Corp. Redwire Corp is an aerospace defense company. They're literally building satellites, space stations, rocket ships, everything you see here, drone programs, research for pharmaceuticals in space, space farming. If it has something to do with space, I'm going to guess they're probably doing it. So this is a company that was brought to my attention by a subscriber, so I said I would take a look at it. I have not heard of it before now, and I do not have a position in this stock. So what I'm going to do here is I'm going to go over to the chart, take a look at it from a high level view, the view from space, you could say. We'll talk about that. Then I'll talk about some price targets, and then I'll talk about the chart and the technicals near term and where we're at currently. So let me hop over to the chart. All right, so here we are at the chart for Redwire. I'm going to take a look at this from the high level macro view. The symbol is RDW. And we could see they were trading last year around in the fall, the September, October, they were trading in this $6 to $7 range. And then this kicked off into an uptrend, a pretty good uptrend where the stock ran up pretty fiercely over the next couple months into February, all the way up here, peaking out at $26 a share. And then twice as fast as it went up, it crashed back down to earth. So what happened right in here that precipitated this, as best I could tell, is that they called in their warrants. So they had these warrants out from a previous financing. They decided to call in the warrants, said you have 20 days or so to exercise the warrants, or they get delisted and they're worth nothing. We buy them back for par value, which is like a penny or something. So what happened then is then all the warrant holders, the stocks up here around 25, 26, the warrants are exercisable for the low teens. So they start exercising the warrants. They pay the 11 or $12 for the warrant to be converted to a common share. And then they sell that share, realizing, a certain percentage gain, almost 100% up here, and then less as time goes down. And then that selling just precipitated more selling, pushed the stock way down. The market got pretty bad, the overall market, uh, and pushed it even further. And then finally it bottomed out in April, started gaining some traction on some good news, ran all the way back up, but this time the high didn't quite reach the high before. It capped out in the $21, $22 range and was doing okay. Had a little dip here. Um, so what happened right here was that this is where they announced dilution. So this day is green. They announced dilution. It's something like 15 million shares for $260 million, and that causes some selling. That was a substantial amount of shares at that time. So then it pushes the stock down. It recovers a little bit, and then has a big sell off here and continues down until finally it hits the earnings. This was the August earnings. The earnings are pretty bad. So the stock now just gaps down below this 200-day moving average and goes into this down sideways trend here. Recovers a little bit, but eventually stalls out at the resistance and comes all the way down to here where we are today, which was another earnings a few days ago, which were also pretty bad, and finally just pushed the stock down. We could see it's all the way back where it was a year ago, right? So we're now back into that $6, $7 trend. So it really has spent more time down here in the 6, 7 range than it has up here in these high level spikes. So what I'm going to do is look at like where is the stock headed? What's the fair value? And try to predict for Redwire what that price prediction might be, or forecast where it might be going by using some technical analysis. All right, so before I jump into the short-term technical analysis and the stock price movement, I want to take a look at the earnings that we just had last week so we can understand what's moving this stock right now. And as part of that, I'm also going to take a look at what these analysts who cover the stock, what their price targets are, and how are they're forecasting that this stock price will move. So as far as the earnings go, in my opinion, it was an earning miss. So what they did is, and I'm just looking over to the side to review my notes, so I apologize for that. So they reported 103 million for the quarter, and build it as as growth, as a year over year increase of 50 or whatever percent they said. But the real problem was that that number included the recent acquisition. So if you separate the recent acquisition, which accounted for, of the 103 million, that accounted for 49.5 million. So if you back that out with the final number, their Redwire's core business actually decreased year over year. So while they have growth from the acquisition, their core business actually did not have growth. So I consider that a negative. The other thing that was really bad that I think is going to impact the stock is that they reduced guidance. The guidance was over 500 million for the year. They reduced it to 320 to 340 million. That's a significant reduction in their revenue forecast. And there's also a little bit of concern that they're burning cash. They went through 24 million this quarter. They have about 89 million left. And from what I understand is that next week they are going to announce another financing round and more dilution of the stock, which if that happens, you can expect that it will put downward pressure on this stock. So all that said, the earnings overall for me were pretty bad. So I can understand why it's driving this stock down right now, despite the rally that we had on Friday. I think that was more market driven than anything. So let's hop back over to the chart. I'm gonna zoom in here so we can see what happened here. So as one more thing. So right in here, I'm going to turn on my drawings. So this is the big downtrend line. This is the downtrend that started way back in February and peaked here. So when I'm talking in context, any rallies that occur below this line are still occurring within a downtrend. So you have a rally inside a downtrend, which usually means unless it breaks this line, you're not in a new uptrend, then inevitably it resumes the downtrend. So regardless of what happens between now and then, it has to break this line. And as you can see over here, this line is up here at $15. It's very far away from getting there at current prices. So a lot has to happen for this actually to break out of a downtrend. But that doesn't mean you can't have a rally where it goes up 50%, 100%. Now, what happened right here, I talked about the underlying reason of why it happened, but what we can see how it played out in the chart, this is a double top. You got a peak and then a slightly lower peak. You have a dip in the middle, and then when this occurred here, actually technically really before, but it falsely broke the double bottom here and then came up and retested and then broke it for good. So what happens when you break this double top is typically the distance from the peak to the trowel here, that would be your estimate of the price movement. So that was about, the peak was at 20, the bottom of the trowel was around 15. So that would be a minimum 15, no, sorry, math, not doing the math right. $5, 20 minus 15. That would be a $5 movement from here where it finally broke down, which was at 13. So if we do another $5, that brings us down into 8. As you can see, it hit 11 here, dropped all the way down and eventually drifted down into that 8 range, which would complete this pattern normally, or at least the prediction of that pattern. But what we really see here is it's trading in a range here. You have this upper level, and let me actually draw a line here so we can see that. It's trading between these two lines. It's just bouncing sideways. Really, nothing's happening for the month of September and October. And then I guess it starts to rally a little bit here in the beginning of October, possibly in anticipation of earnings coming up or just maybe some news that was released. And inevitably, it hits this 200-day moving average. And that's the resistance point, and that fails and pushes it back downwards. At that point, let me remove that line for a second so we can see a little better. Zoom in a little bit. At that point, you get in this trend channel here, and it's just bouncing from in a downward direction, but from the top of the trend channel to the bottom. Then it bounces up, then down, and it bounces up, bounces along. So that's all. We're bound into this trend channel, and the price is going to stay in the channel as long as it stays in the channel. I should say is going to continue to move down here. There's no reason to stop it now. It may find support and start just kind of have a soft break and move sideways. Now, that said, this right here is a bullish signal right here. This is a bullish engulfing candle right here. So that could mean that next week you get a rally or you get a bounce. I would expect if it's a weak bounce and the markets are so-so, then you're going to stop at this upper trend channel. You might come out of it temporary and close back in it. Just remember that a temporary break, if it's just the top of the candle and the price closes back in the channel, that you haven't broken out yet. So as far as I'm concerned, this stock, for me, it's a watch list stock. I leave it on my watch list until something changes, until it breaks out this channel, until something happens. Otherwise, I would predict that this stock is just going to bounce around down this channel and eventually it'll find a bottom and without a catalyst, it'll just make a soft change and move sideways like we saw up here in this trending portion. That's not going to have a big signal, and it's going to be hard to determine when that happens until you see some bars for the um, otherwise what you're looking for before this comes a buy would be a break out of this channel. So again, you have this was a support line, it's now a resistance line. Any break of the channel is going to first have to fight through the channel, and then it's going to have to fight through this little bit of resistance. And then the big test here is going to be this line right here. That's the 50-day moving average. That is where I expect any rallies to stall out. That doesn't mean that the rally completely is over. It's just that would be your first point where I would expect the stock would either be rejected and come back down, or it would be rejected and move sideways into a bull flag or some kind of consolidation pattern before it started its next leg up. And that would be the ideal situation. So the ideal situation would be stock breaks out of here, hits the 50-day, stalls, but doesn't pull back all the way down into the channel. It pulls back maybe to the support line and bounces for, say, a week, 3 days to a week. Then finally would break above the line, come up here. Then your next test is this 200-day moving average. Stock hits that, and again, you want to see this stair stepping. And a good example of what I'm talking about when I say stair stepping is what the stock did in its previous rally. Back over here, if we look at this, when this stock broke out, it came up here, then it would pull back, hit the line, and then it would come up, pull back. But each time you're making this series of you have your resistance, you break out. When you come down, you don't come as low. Or if you do come low, like here, you test the line and you bounce back up. So this stock was great in the uptrend until it got here and it failed that test. And that's the same setup you want to see over here. And I just moved my line. Let's put that back. But ultimately, as I said, this is the big downtrend, this line up here. So you got a lot of work. And if you want to get over this to the 15 and beyond, it has to stair step its way back up. It has to break these short term channels, has to get back over the 50-day and over the 200-day. That's a lot of work. I don't expect that you're going to see that play out in a week or two. That is more like something that will play out over a quarter, perhaps, or maybe when the end of the year comes and they do report for their final quarter of the year, then maybe you'll start to see the stock moving back up in here. But right now, the chart is telling me that the investors in the stock have lost faith in the ability of the stock to execute. And I would agree. Right now, this is not a stock that I would be putting my money into. Although, like I showed earlier, they have a lot of great projects going on. They have a lot of potential, and I think that's what attracts people to these type of stocks is that it has a lot of potential. But for me, the potential itself is not enough. Like what I'm looking for is I would call it perp. I'm looking for so PERP. I'm looking for potential. I'm looking for execution, revenue, and profits. So right now they have potential. They have no execution. They have arguably shrinking revenue and they have no profits. Okay. So other than potential, and again, potential doesn't mean that the stock can't in a year or 6 months turn itself around and do better. But in the short term, that's all the stock has is potential. None of the other factors are kicking off right now. So for me, I would like to see some of those factors improve. I would like to see that they execute on fully bringing in their acquisition and that is growing now, that their core business is growing and that their revenue is growing and that they're eventually reaching profitability. So again, just calling this one a watch list stock for myself. And that's all I got for you. If you have any questions or you think I am in error on something, please leave a comment. Let's discuss it so we can make some money together. Talk to you later.